please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, South Korean President Moon Jae-in arrived in India on a 3-day visit on Sunday. Now, in his maiden visit to India, the president is leading a delegation comprising of senior members of his cabinet, officials as well as industry captains. President Moon will hold talks with Prime Minister Narendra Modi on several issues such as Korean Peninsula, bilateral trade as well as defense cooperation.
All right, so that is something we will be watching out for. But back home, remember, on Dalal Street, Nifty did hit the 10,800 mark on Friday, failed to sustain above those levels, ended off highs, but the Sensex too ended with about an 80-point gain, with the gains led by Nifty Bank. The fall on the Nifty came in the last half, with the Nifty ending, Nifty mid-caps rather, ending flat with a slight negative bias. What is on the plate for today? Well, Nigel, good morning. Tell us, what are the cues you're working with this Monday morning?
Well, good morning, Mangalam, as well as Anisha. You know, on Friday evening, I don't think any of us were really looking at the markets. We were all tuned in to the football action. But wake up Monday morning, you need to look at what happened. So first up, U.S. markets, they ended in the green. Pretty good news coming in from there. The employment data, in fact, looked quite good. The number of jobs added was good. But in fact, you know, the unemployment rate was a bit of a miss. So that was a bit of a disappointment. And even the average hourly increase was a bit of a miss. On the whole, if you pull up the dollar index, you'll see that that cooled off, telling you the street viewed it more dovish rather than hawkish. So at some point of time, we should get the dollar index up for you on the screen. Well, coming back to our own markets, the Nifty ended last week with mild gains. We ended Friday's trading session as well with some mild gains, but we came off the high point of the day. The Nifty did a U-turn from around the 10,816 odd mark, and that should be now the near-term resistance that we're likely to look at. That's the big hurdle. But in individual stocks, they did their own thing. If you look at it last week, well, some of those auto stocks did well from the Nifty pack itself. You had Bajaj Auto, that was one of the biggest gainers. On the flip side, the biggest losers as well were there in terms of the Nifty stocks. Vedanta lost out close to around 7%. You had Titan as well that did see some profit booking as well. But if you're looking at the broader markets, the moves were far more. So in the mid-cap space, you could have made money if you got into the right stocks that are up for you in the screen. But if you got into the wrong stocks, Shriram Transport, that caught your eye last week. And NBCC as well, everyone's talking about that order book. Suddenly, in fact, some massive profit booking is what we're seeing on that counter. At the end of the day, we look at the flows. The FIs were selling yet again close to around 1,000 crores. The DIs, they pumped in nearly around 1,500 crores. So the DIs have been doing their bit. But we have the mutual fund inflows over the weekend, and the equity mutual fund inflows have slowed down. Now it's come in sub that 9,000 crore mark. Remember, there was a bit of a warning signal that was coming in from a lot of the experts that joined on our channel, and that's precisely what happened. So even the balanced inflows, balanced fund inflows, that as well has slowed down. So let's see how the street negotiates with that. In terms of the derivatives market, well, the FIs, they added some longs rather than shorts. Overall, though, they're net short on the index. They bought close to around 2 calls for every 1 put as well in Friday's trading session. Overall as well, they bought far more calls than puts. And finally, they're writing some calls as well. So if you're looking at it, what are the data points you should be looking at? On the downside, the 50 DMA, that should be a bit of a support that we're looking at. While on the upside, you know, the series high, that's the high that we saw on Friday's trading session, that should serve as a bit of a resistance. And by the way, the SGX Nifty is suggesting we could be opening up closer to that mark. But earnings season kicks off. I hope all of you all are ready. This week itself, a few big names, IndusInd Bank, TCS as well as Infosys. Let's see how it goes. But earnings season is here. So not just FIFA, even earnings are going to keep you up later, looks like.
Oh yeah, and you said the earnings season kickstart, but there were a lot of important kickoffs over the weekend. Which one was your favorite match? Croatia, Russia or Belgium, Brazil?
I think that Croatia match was a bit of, you know, it was splendid, but I feel for the Brazilians. I feel for the Brazilians. They put in such a good fight. We have been fooling about Neymar.
Are they allowed to come in here? Y'all can talk about football as much as y'all want to, but cricket, boys, our Indian boys went ahead and told the English guys, bro, we've come here, we will win this match. And then there is the ODI, there is the test. Let's see who the men from the boys are.
And what about the hitman, Rohit Sharma?
The hitman hitting his century.
When he comes in there and he hits a century, whoo, wow. that was a good end to the weekend, by the way.
Absolutely.
Okay, so we have covered tennis as well as football as well as cricket. Tennis earlier when you started off the show. So a lot of stocks that we'll have to cover today, Nigel.
Absolutely. We'll have to talk about stocks because, you know, that's what we do.
It is Monday morning.
It's Monday morning. So, Results this week first. Some mid-cap stocks as well that come out of the numbers. Dish TV, Karnataka Bank, Bajaj Corp, Cyient. Keep an eye out on those stocks. We have NMDC's numbers. The production numbers and sales numbers have come in for the month of June as well as for the quarter on the whole. Fairly disappointing numbers, but the street was really expecting these numbers because the Karnataka mines output has been far lower. So that's something that you should be looking at. Some part of that bad news would be in the price as well. Sterlite Tech, we saw the stock moving higher in Friday's trading session. Maybe the street senses that, the market's always smarter than everyone. They have acquired 100% stake in a European company, European specialized optical cable fiber company. So keep an eye out on that one. GVK Pa, they have announced the financial closure of the Navi Mumbai airport. So keep an eye out on GVK, but also keep an eye out on JCorp as well as RIIL. Whenever we have any news or sound bites coming in about Navi Mumbai, you see both those two stocks moving as well. UCAN, the stock has gone up more than 10 times in the last 12-18 months, or that's because they've relocated one of their plants. And now, in fact, they've launched a residential project. This was long awaited. This was the reason that the stock had a big run as well. So Brigade Enterprises, yes, keep an eye out on that one, but also UCAN, that's the one you should be also looking at. And finally, Kirloskar Pneumatic, well, they're going to be considering a stock split as well. That as well has seen a bit of a move. The stock was up 8%, again, ahead of the big announcement. Both these two stocks did see a run.
Absolutely, Nigel. Take your point, especially on JCorp as well as RIIL. And you can too. I remember the management coming and joining us on CNBC TV18 and telling us that this is likely to come.
Any update from you over the weekend?
No, none. Okay. In fact, on that note, let's shift focus back to the markets. Let's hear out some opinion come by from Ajay Srivastava of Dimensions Corporate Finance Services.
One must give credit to this market. The fact is that we have not broken down in spite of all the walls of worry, in spite of all the FI selling, in spite of all the negative news flowing in, the trade wars, the Trump wars, the China issues. The fact is the market is not breaking down. And I think that's great strength and resilience in the market. Maybe liquidity, maybe just the fact that people are trapped into the market, they don't want to get out, or whatever you can call it. But the fact is the market is holding firm. So you could see serious pain in some of the mid-cap if the results are not expectations. So hang on to this one. This is going to be a rough ride in the next 45 days of the results. I don't think large cap will give you the big bumps. It's a small and mid cap which may surprise you to the downside. A lot of people have neglected very easily the MNC pharma space. That's done phenomenally well, should do much better in the next 6 months or 9 months to come. When you say IT, yes, IT mid-caps have reached certain stage, but I think they still got a way to go. I think you've seen things like Tech Mahindra is the only one which climbed all the walls of worry. You've seen Emphasis, you've seen Alexei, etc. They are reaching a good point, not a bad place to even enter now.
Remember, the market's volatility seems to have had some impact on investment flows in mutual funds. Equity fund inflows actually saw a 32% drop in June. This compares with May. Surbhi, as always, joins us to analyze these trends. Surbhi, the volatility in the market affecting the flows.
That's right, Mangalam. Good morning. Yes, it's not very good news if you're looking at the fund flow data. And that's the single biggest factor that's been holding up this market. The fact that mutual funds continue to pump in the liquidity, even as FIIs are selling. However, the numbers this morning tell a slightly different story because the confidence seems to be shaken up just a bit. Now, the headline equity number that you mentioned, that includes arbitrage fund flows as well as ELSS flows, the SIP money that you and I put in. And that number itself has come down about 32% on a month-on-month basis. On a year-on-year basis, we're looking at very, very flattish trends. Numbers are up just about 0.8%. So year-on-year, no major surge. Month-on-month, the trends seem to be coming down. I will talk about the ELSS category because that's the sticky money that we always highlight. And there, the number has come down to 866. This number in the month of May was over 900 crores. A slight drop even in the ELSS flows. Now, the problem this month has been arbitrage because arbitrage funds have seen a net outflow of a little over 1,400 crores. That's why the total equity number that you are looking at around 8,200, that's also a very, very sobering number. Last but not the least, let's also talk about what has saved the day, and that is really ETF money, because ETF flows this time around have seen a massive surge. The number has crossed 8,300 crores. Now, before we, jump with joy, there is a one-off here which we will have to account for, and that is the money that came in the Bharat 22 ETF. Over 8,000 crores came into that ETF. It had a green shoe option as well, and that is why the overall numbers are not looking that bad. Otherwise, perhaps these numbers would have been even more dismal. Final point on balanced funds. Now, that's a trend that reversed as soon as the LTCG era came into being in April, and funds have seen flows dwindling, and that trend continued this time around as well. So on balance, we are down to just about 1,400, 1,500 crores. The numbers used to be as high as 7,500 crores in June of last year. Even month on month, the trends are down. So yeah, we'll have to watch out for these numbers. June, not very encouraging from the fund flow point.
Okay, thank you, Surbhi, for getting us all that perspective on the inflow data. So, sobering data coming out for June. Let's say whether the markets take note of that today or not. But moving on, the Employee Provident Fund Organization, or the EPFO, has actually handed out a sharp cut to the enrollment data it has released earlier. The EPFO had claimed that nearly 40 lakh people had enrolled with the organization from September last year to March this year. The Prime Minister recently cited the EPFO data to claim robust job creation in the economy, but now the EPFO has actually revised this data lower from nearly 40 lakh enrollments to just under 35 lakh enrollments, and this is, remember, a reduction of over 12%.
All right, in January this year, a report by the SBI Chief Economist Soumyakanti Ghosh as well as IIM Professor Pulok Ghosh wrote a report based on this data itself, claiming that nearly 6 million jobs were added to the economy. Opposition parties like the Congress had questioned the report and the reliability of the EPFO data. On this, we spoke with Soumyakanti Ghosh himself as well as Praveen Chakravarti, who's the chairman of the Data Analytics Department of the Congress. Let's listen in to what they had to say.
No, yes, I think any data revisions is a continuous phenomenon, so I think we should not get bogged down by these data revisions. The entire, I mean, even the USA gives out data which is revised, the CSO data is also revised, and I think the possible reasons for data revision is that since this is the net data, basically people who are coming in and going out and the difference is taken. So what is possible is that people who are joining, that data is being reported by the organization immediately, and people who are leaving, that data may be delayed by maybe a couple of months. So that's why you see that the revision for the March is the steepest.
Jobs and formal jobs claim starting from the Prime Minister is just laughable based on EPFO data. You know, I think let's not conflate things. No one is saying that the release of new EPFO data is a bad thing. It's actually a very good thing. We welcome this data. What we question, and I questioned right immediately, days after the grand claims were made that India creates 6 to 7 million formal jobs a year based on this data. And all we said at that time was, hello, please be cautious. Be cautious. The data is not stable. The data is too new. We do not know the methodology behind the data, and the data is for too short a time period.